It's different this time. With the U.S. economy, with our futures as Americans, I contend it's different this time. And I aim to explain why in two simple yet powerfully poignant graphs. Hi everyone, thanks for watching Yankee Stacking. Please don't click on another video, even if it's mine, or move that YouTube slider to fast forward through this. I'm going to sacrifice some details and ignore a mountain of other evidence to hammer home my point as quickly as I can, I promise. I'm not going to tell you about what gold or silver to buy. I'm not going to explain my Yankee stacking strategy, none of that. I'm coming to you not as a precious metals expert or a financial advisor or even an economics guru, but one who has invested over 30 years in a wide variety of financial instruments like stocks and bonds, mutual funds, derivatives, hedge funds, real estate, whatever. And I'm also someone who deeply loves his country and wishes to help his fellow Americans. I firmly believe that our U.S. economy is teetering on the edge of calamity, unlike at any other time in our U.S. history. And I believe the unprecedented action that happened just over 10 years ago doomed us and our future, economically speaking, and maybe even our safety. Does that sound like crazy talk? Is that nuts? Is that total hyperbole? Well, maybe you might think that. Most Americans would think that. Sadly, most don't have a clue about our economic situation, and they don't care. And many, maybe some of you, think everything is fine with the U.S. economy, but it's not. All right, the charts. This first chart, right here, is the adjusted monetary base. Okay, woohoo, what's that? Simply put, it's our country's currency in circulation and on reserve in our banks and at the Fed, the Federal Reserve. It's our money supply, currency really. It's what we've printed. And it's on our balance sheet. It's a liability to our country. It's not the national debt that just topped 22 trillion, I think, and we'll hit 23 trillion probably this year. No, I could probably bore you with that chart, but I'm not gonna. You've probably seen it. What you see before you is inflation. It's our money supply. And it's a hockey stick of disaster. Okay? You know, inflation is not the price of, ring dings at the grocery store or your rent for your apartment. No. That isn't inflation. That's the result of inflation. Higher consumer costs. This is inflation. Some of you out there are saying, all right, Yankee, we've heard this before, pal. But governments love to spend money, man. They love not to pay their bills. That's the way things are. That's the way it's always been. That's normal. That's the American way, Yankee. Come on, man. We have the greatest country in the world, which we do. But everybody wants to come here, and everyone wants to be like us and live like us. Relax, Yankee. We do have a great country. But economically speaking, we are so in trouble. Again, I'm asking you to tap into my age and experience just for a minute, okay? Especially those of you who have never experienced a recession as an adult. All right, so this chart runs pretty much since I was born in 1966 all the way through now. Okay, and it shows a slowly inflated money supply. Again, during the 70s and 80s and 90s, even the first decade of the new millennium. But it was different back then. We were predominantly a saving nation, a manufacturing nation, a nation that took pride in being the envy of the world because of our production, not our consumption. But what happened? So during this time, we sent our manufacturing offshore. We greatly expanded our international military presence. We expanded government bureaucracy. We succumbed to the lure of endless entitlements. We gave into insane union demands. We put unrealistic regulatory requirements on our small businesses. We did a whole bunch of stuff that undermined us. You know, these gray bars right here, they're recessions. Okay? And they come with pretty stark repetition or regularity, if you will, in this fiat currency-based economy that we live in. And we've weathered them okay. But all along, we ignored the warning signs, the big, fat, red warning sign that a people and a nation who live beyond their means and can't pay their debts will have a day of reckoning. I remember this recession, and I remember this one as an adult, a working adult. But this one right here in 2007, 2008, I believe that was the point of no return. So what happened? Well, I'm not going to go into too many details. I can't. I don't have enough time. You'll tune me out. But it was due to toxic investments, duplicitous banking games, crazy home equity practices. Oh, and a government that actually thought everybody deserved a house regardless of their ability to pay their mortgage. Yeah. So what happened? Things started to collapse right in here. I mean, really bad. It's a Great Recession we're talking about here. And we literally came within hours of paying the piper. But no, politicians could never let that happen. We can never, ever pay the price for our actions. So what do? We printed money like drunken sailors. With apologies to drunken sailors. More like a banana republic. We did that to save ourselves. And what we did is we bought up all the toxic assets that we had created and added them to the adjusted monetary base, our liabilities as a nation, our balance sheet as liabilities. We did it not once, not twice, but 3 times. Ben Bernanke, the head of the Treasury, said to Congress that this insane action right here was only temporary. He literally said that only unwise and bad countries take on garbage debt like this and make it permanent. Your government promised to get rid of this, to sell it off in the open market. And they tried. They tried right here for a couple of years, right here, until January, when they had to stop dead in their tracks. Because why? Because the stock market couldn't handle it. Do you remember that? Do you remember December? The president and the central banks were petrified that we were going to go through another recession, even though it's probably going to happen regardless, right? They caved. Of course they caved. We were doomed the minute we started down this course of action. We can never get rid of this garbage. And in fact, the minutes that were released from the last Fed meeting admitted they can't get rid of it. They lied to us. Shocker. They're never going to get rid of this. This is the new normal. They can't get rid of this debt. All right, so that's one chart. I'll go faster on the second chart. This is the federal funds rate. All right, what does that mean? Think of it, let's call it the interest rates, okay? Basic economics. I borrow from you for a while. You should expect it back in full with interest, right? The time value of money. I borrow it, pay it back with interest. And in my lifetime, again, that's what this is, I've seen all kinds of interest rates, okay? Skyrocketing sometimes. But one of the magic tools in the Fed's magic toolbox was to raise interest rates when times were good, and then lower them when things got bad. That's how they played in this fiat-based, non-precious metals-backed currency that we have. That's how they play it. Okay? So every time you see a recession, you see Fed action in the interest rates. Drop them. Oh, right here. Boom. Drop them. Quite a bit, actually. Drop them. Multiple percentages. Drop. But what happened here? This is again where I think we passed the point of no return. We dropped them all the way to zero. Zero. That meant that we could not only spend like drunken sailors, we essentially could borrow like them. For years, it was kept at zero. For years. And it was building and building a bubble of debt to astronomical levels. And then, when the Fed tried to inch them up, right here, gain some altitude here, they actually had the audacity to say that rate hikes were on autopilot. That they would just go up automatically. No problem. We're raising rates. But what happened? The markets, addicted to this cheap money, freaked out in December, and in January, they caved. They stopped raising rates. They signaled that cuts were a valid and possible tool that they might use again, even though they only got it up to 2.25. I think they're going to use that tool. They're going to have to drop them again. We are so addicted to cheap money, the markets won't let us stay where we're at. Friends, these two charts, I believe, spell disaster for our economy. Our paper wealth is a facade. We have mortgaged our future to an extreme level, and we have no way out, except for maybe one, to inflate our dollar into oblivion, to come in again and dump money more than we ever have before, sacrificing our dollar and causing our economy to crash. This is when this will be so important to us. I believe that we will see another recession, and soon. This year, in fact. I believe we will be unprepared to respond to that recession. I believe we will print more money than ever before. I believe we will see other countries finally reject our IOUs, what we call treasuries. I believe we will finally see out of control inflation. Because I believe we will have that day of reckoning. Because it's different this time. Thanks for watching. And I hope your day is a-okay.